Hi, it's Rick Ellendorf with Caliber Home Loans, and today I have some really good news for home buyers, specifically those that are looking to buy a higher priced home but have limited down payment funds. Well, now there's a new option. Stay tuned for this week's Mortgage Tip of the Week. Okay, so Fannie Mae had a pretty big announcement based on the selling guide announcement that I'll go over on the 29th of September. Which made some big changes for people that are trying to buy higher priced homes. Typically, when you're trying to borrow over $417,000, it was very difficult to find a loan program that had anything less than a 10% down payment requirement. Normally, you'd have to, if you're borrowing over $417,000, if that's how the math worked out, the loan officer would have to do like an 80-15-5 or a second mortgage on there. You'd have to do an FHA mortgage, just things that really weren't as good. But since this policy change, let me show you what it looks like. The policy change has changed everything. So mainly having to do with the high balance mortgage loan eligibility. So it says here, Fannie Mae has aligned the eligibility of high balance mortgage loans, which is everything borrowing $417,000 or more, with Fannie Mae's standard eligibility requirements with LTV, CLTV, and HCLTV ratios up to a maximum of 95. So what that means was everything that was kosher to do when you borrowed less than $417,000 is now okay to do for a loan over $417,000. So now if you're buying a $600,000 house, you can put 5% down and not have to go FHA, not have to jerry-rig the system and do like an $417,000 first mortgage and supplement a second mortgage. You don't have to do any of that. You just put 5% down. This is so much better. It makes all the difference in the world, especially if you're up against competing offers, and conventional offers typically are doing better in that scenario. So let's look at the spreadsheet here. I did a typical scenario here of what it used to look like when you had to put 5% down buying a $600,000 house. Typically the way it would go is if we're standard one loan with the FHA loan. And you're looking at a rate somewhere typically about 3.75, and there's your payment. So you got this problem with FHAs, you got this massive mortgage insurance, PMI, and even worse, you've got this mortgage insurance premium you got to pay to HUD just for the ability to have an FHA loan. And on top of that, they finance it. So your payment's higher, everything's kind of worse. Now, look at the conventional now. If you just took it with the normal Fannie Mae new requirement now. So 5% down, same loan, $600,000 house, 5%, you're financing $570,000. So it looks, your payment's almost $100 less per month right away. But here's something else you can do with the conventional loan, which you can't do with FHA. You can actually have what's called lender-paid mortgage insurance. It takes the rate up just a little bit, but look at the payment. Look at the payment drop. So now you can buy a $600,000 house. If you have good credit, you can keep your payment around $33.59 a month with only 5% down. So I really hope this helps. Really great changes from Fannie Mae. If you have any questions or want to see a specific worksheet to your example, don't hesitate to give us a call. Links in the description or comment. And thanks again for watching, and hope to talk to you guys soon. Bye-bye.